What up, folks? It's your boy Kenneth, 100 Years of Wealth. Thanks for checking back in. Here to drop some information on you on how and why how you can improve your credit scores and why it's so important to your financing life and just to your life in general to have good credit scores, right? So please go ahead, now that you're here, like, subscribe, and click the bell for notifications to make sure that you keep getting these videos, because I'm only gonna provide information that adds value. So as you know, if you watch any of my videos, I am a mortgage and real estate professional. Mainly what I do is mortgage brokering and mortgage lending. So I'm always dealing with credit, always working with people. Credit is the primary, thing that we're using to qualify people, obviously income, but credit is the first step. We got to find out what your credit history is, right? So not only am I always looking at credit reports and dealing with trying to improve credit at certain times, but I've also gone through it myself where I needed to get my credit scores up. I had made some mistakes in the past on my credit, so I had some different lingering accounts that needed to be updated, removed if possible, and basically just needed to make improvements to my credit. So I want to let you know how I did that, and just overall how to maintain good credit scores and overall good credit history and what things you need to do and look out for. So I was making this video a moment ago and then the phone rang, which pissed me off, but I want to jump back in it really quickly and let you know. So first off, to keep good credit, avoid doing up stuff to your credit, right? Only take out accounts that you know you are in a position to afford the ability to pay back. And that rule right there will make it to where you avoid going into situations where you have collections, where you have balances that are maxed out and weighing down your credit score. So obviously that's easier said than done, but generally speaking, go into credit and really only buy things or only apply for things that you truly need and you can truly see yourself able to pay back without much issue. Because you know how it is, if you're being real optimistic and you're like, I think this will work out, I should be able to do this or that, and you're not 100% sure, things change in life, jobs adjust, income goes up, goes down, and that's where those credit problems become issues. And then you start looking at like, damn, can I pay this? And the next thing you know, you're a couple months behind and something's on its way to becoming a collection. You can avoid that just by being very thoughtful when you are considering taking out any sort of debt, right? Or any sort of credit card, car account, car loan, cable bill, whatever it is. You just got to be really considerate about your financial situation to make sure you don't put yourself into something that you're going to later on be trying to dig out, right? So first off, only take on accounts that you have a very clear vision that you'll be able to afford comfortably, right? From there, you should be in a position where, okay, the accounts that I bring on, I can afford to pay these off as I go. The true purpose of credit is just to avoid having to carry cash around, right? So if the true purpose of credit is for me to take out an account that's, let's say, $1,000 balance, so that when I'm out and I want to buy a TV or want to buy groceries, I don't have to have $1,000 cash on me or a few $100s cash on me. I can use my credit card, and then when my bill comes in the next couple of weeks, pay that balance off. That way I'm using credit appropriately, I'm paying it off as I go. Maybe initially when you first get credit, you might want to use the account and then pay that back so that you have some sort of a payment history. But generally speaking, credit is supposed to be used as something that is a convenience instead of having to carry cash around with you, right? So keep that in mind. From there, let's say that you do end up carrying some balances and you're not paying the full balance off every single month. You want to maintain low balances in comparison to the available credit, right? So if you have an account that has a available credit of $1,000, you're probably going to want to keep your balance below $500, because once you're above that mark, you look like you're a credit risk because you are exercising a high usage of that credit card, and it's going to definitely have a negative impact on your credit report or your credit score. For me, I work within a system where I run credit all the time, and we have the ability to do what's called a what if simulator, meaning that I run your credit, I'm looking at your credit scores. let's say your credit scores are 700, and then I look at one of your accounts and it shows that the available credit limit is $7,000, but you owe $6,000 out of it, right? What that's going to show me is going to show me that you're at what, 80% or so of the usage of the credit card. And I have the ability in the system to kind of play with the numbers and say, okay, what if we paid that balance down to below 50% of the available credit? And it always has a positive impact on the credit score. Varying, it might be 10 points for one person, 20 points for a different person, depending on your overall credit history. But having a balance above 50% of the available credit negatively impacts your scores. So you'll have people that have good credit history, they've paid all their accounts on time, they have no collections, but they have a very high usage on their high usage out of their credit balances, and it's reflected negatively on their credit score. So keep that in mind. Keep your balances low comparative to what your available limits are, right? Because that shows to creditors that, hey, this person actually has available credit and they're not using it. They're not living off of credit cards, right? They're able to use credit cards for their purpose. Hey, I'm gonna use this card because I get points on gas and then I'll pay it off at the end of the month. Or I'll use this card because I get points for groceries and then I'll pay it off at the end of the month. Obviously, credit card companies like when people, use the credit cards and then interest, they pay the interest over months or whatever, but that also contributes to negative scores, which increases your financing rate, right? So they want you to pay the credit cards back, but they would just rather you pay it back over time, which will increase the interest rate that you're paying to them, increase the amount of interest that you're paying to them, as opposed to someone who really manages credit appropriately, uses it for some things, pays it off shortly after that. It doesn't have to be that same exact month, but the shorter period of time that you're carrying a balance, it really shows that you're using credit appropriately, right? So that's another way to stay in good standing overall with your credit. Keep your balances low. Only use the credit card for things that that you're confident that you're going to pay off shortly after that, right? So those things right there are just like a managing of credit. How do I keep my balances low, which reflect positively on my credit scores? So obviously that's one side of it. And then your payment history, right? Making sure to pay your accounts on time each month, right? So if your credit card is due on June 1st, July 1st, or whatever, you do have, I don't want to say a grace period, but obviously you're supposed to pay it right away, pay that. But if you don't pay it in the first few days, that's fine, unless you have like a grace period or a late fee after a few days. Obviously you want to avoid late fees, but you will not have a late payment on your credit report unless you made a payment past 30 days after it was due, right? So you want to make sure you don't have any 30-day lates on your credit report, because that will affect you negatively, and it stays on your credit report for at least like a lot of times 24 months or 36 months. Just a 30-day late could stay on your credit report for the next 2 to 3 years, having some sort of a negative impact on your credit score. So you want to be aware of when your payment is due. Even if the account has you're not really using that account often, set it up on a minimum or set it up on an auto payment, right? So that if there is a minimum payment that pops up because maybe there was an annual fee or there was some small amount that was applied to your credit card, maybe it was like I said, an annual fee, a monthly fee, something that you really don't remember charging, set up your credit cards to have a automatic payment come out of your account. That way you don't forget it, because worst case, you can dispute the payment. If you look and you're like, oh shit, they charged me $100. Where'd that come from? You could dispute it, but what you can't dispute is when that payment is missed and you have a 30-day late because you just totally forgot, you can't dispute that. If the payment was made after the 30 days, doesn't matter how great of a client that you've been, they're not gonna remove that. It is what it is. So be on top of your payments when they're due. Make sure you're on top of your balances so that if you do have something that's coming due with that particular credit card, and stay on top of your payment history. And that will avoid the next thing, anything turning into collections, right? So obviously if you had some sort of financial issue where you weren't able to pay an account, you weren't making payments, the next step is that's going to go into collections, and that's going to have a very negative impact on your credit. Not permanently, but until you either get that collection paid off, clear it up, removed, it's going to have some sort of negative effect on your credit report. And it's not just as easy as paying it off at that point. You have to then start disputing it and, try to come up with some reason as to the reason why that shouldn't be there on your account, right? So avoid that by staying on top of your payments, keeping your balances low, use credit for its proper purpose. Don't just be using it just for, anything out there. And that way you're less likely to have some balance that's just built up at a time where maybe you're not ready to, really in a good financial position to cover that expense, right? So just being responsible and not really using credit as like a source of funds. You're using credit as an exchange for carrying cash, right? So if you think about it that way, then you're always going to have the money in the bank account to pay off that balance, and you're going to want to avoid getting hit for as much interest as possible. So you want to pay that stuff off as soon as possible, right? Maximize the points that you can get with these credit cards. Don't maximize how long you keep a balance going, okay? The last thing that I'll say right now is if you did get to the position where you did have some sort of a collection on your credit report, what you want to do is dispute it if possible, right? If the account's legit and you got to pay it off because it is legit, it is what it is, then go ahead and pay it off and see if you can first get a deletion letter. Ask the creditor, hey, if I make this payment in full, will you guys provide me a deletion letter? Sometimes they will. Sometimes they'll just show the account now as paid in full as opposed to collection, which is a better standing, but it's not going to be as good of a standing as if they were to just delete the account and move it out of collections and just show it as a account paid and paid as agreed, right? But what worked for me before, and I had some collections that, some of them were legit from the past. Some of them, I don't even remember exactly what they were for at that time. I was just like, where's this account from? So what I did was I just disputed all of them, right? The Fair Trade Commission, FTC, the Fair Trade Commission, on their website, they have a stock credit dispute letter. And here's the way that disputing something works on the credit. So let's just say that I had an account with, let's say, a telephone company, let's say Verizon, right? And back in 2005, that account went into collections, and now that account has made it to some sort of collection agency, right? So now this collection agency has, most of the time, they bought a list of data of people that were in collections with Verizon, right? They really don't have the full file. They don't have all the documents related to it. They just usually have a list of what you owe, when your account started, when your account went into collections, etc. And they basically paid a certain amount for the ability to try to collect on those accounts, right? So they can collect on those accounts till the cows come home. Those items can only show up on your credit report for 7 years. But if you're let's say you're at the early part of that 7-year period, you're like, you know what, I can either wait 7 years for this stuff to fall off, or I can try to dispute it. Once it's moved from the main creditor, like once it's moved from being an account at Verizon or whatever, Spectrum or Time Warner, once it's moved from that to being a collection company with, Jim and Associates Credit Company, the way that it works is that if you were to dispute the collection with Jim's, collection agency, you would write a letter to the credit bureaus, you'd write a letter to Equifax, you'd write a letter to Experian, you'd write a letter to TransUnion. So that'd be 3 letters per collection account that you're trying to dispute. And you would say, hey, Equifax, I see Jim and Associates Collection Agency is collecting on a telecom bill from 2005. I have no idea what this account is. I want this deleted from my credit report right away. Equifax looks at it like a service to you in the sense of, okay, we'll take that direction from you, we'll read that letter, and then we're gonna contact Jim and Associates and say, hey, Jim, you guys have 30 days to prove that this account is accurate, or you guys need to remove this from the credit report. Usually at a point, 5, 10 years, maybe sooner, sometimes maybe longer, but usually at a point where it's just a collection account and it's not like the collection is with the original creditor. Usually these collection agencies don't have as much incentive to go back and forth with Equifax, TransUnion, or Experian, providing them some sort of documentation that proves you as the account holder or as the original account holder. I would assume that they would probably have to provide like the original file, some original signed documentation, when all they're looking to do as a collection agency is reach out to you, scare you a little bit about the collection, and get you to send over a few $100 to pay off that bill. They're not really looking to go back and forth with Equifax and verify information that may not be readily available. So what usually happens, they don't respond to Equifax, TransUnion, or Experian, and then usually about 30 days later, you get a letter from those companies saying, here's an update on the dispute that you requested. That company either responded or that company didn't respond. And for me, it took a few months, but next thing you know, every account that I disputed was deleted, completely gone. Can't say that's gonna happen for every scenario. It really depends on the creditor, on the collection agency, how long it's been in collection, all that stuff. But that is how disputing things on your credit report works. So you don't necessarily have to go and pay a company, a few $1,000s or, more or less sometimes to dispute that. You can do it yourself and really take control of your process of getting your credit report clean. So that's the point where once you have something that's gone into collections, once you actually have something that's shown as a derogatory on your account, that's how you're going to dispute it. You're going to write a letter, or you're going to go to the Fair Trade Commission website. They have a pre-stock letter for each one of the credit bureaus. Hey, while you're at it, while you're watching this, go ahead and like and subscribe. I'm dropping jewels on you. This literally took my credit score from being where it was hovering around in the low 600s for a long time. My credit score now is in the high 700s, and it's remained that way because I've, years ago, once I got everything cleaned up, I applied all the practices that I was telling you and, or that I've showed you in this video, and I've stuck to it. You know what I mean? Like, I don't use credit unless I need to. Only things I really have financed are my house. My car's paid off, my credit cards, I really don't use them because there's not a lot of benefit a lot of times, and I don't want to get in the habit of just using my credit cards and then looking up and having a balance and I'm like, okay, now do I want to pay that off? Just pay the damn thing off up front unless you really need that credit card for some reason. You know what I mean? Like it's just better off to use the cash that you have for certain things so that you're not building debt. And that debt it's not like they just let you sit that debt there. They're charging you interest daily that you have that. So draining more of your money, right? So keep that in mind. Keep your credit low. Use your credit strategically. And there you go. So like and subscribe. I'm dropping jewels. Drop a comment if you have any questions. In the link, I will put the link to the Fair Trade Commission credit report dispute forms, and then that way you can go right there. And once again, like, subscribe, put a question in the comments. I'm only here to help, champ. Tell me what you think of the crib. Tell me if you like the Spanish architecture with the big windows, great views of LA from all around. But hey, look, I hope you guys are all well. 100 years of wealth. You stay up, keep grinding, keep getting yours. And hey, get your credit scores up, fam.